A cloud communication powerhouse making waves in Southeast Asia and its UK subsidiary just secured a game-changing 99.9% stake in their Indonesian operations, positioning them for explosive growth in one of the Asia's most dynamic markets. But that's not all. They are revolutionizing public transport with cutting-edge RCS-based ticketing and Google Wallet integration, starting with a major metro system in India. With a staggering 4,023 crores revenue and robust 14% EBITDA margins, this tech innovator is reshaping the future of communication. Want to know who is behind these impressive moves? Stay tuned for the full analysis. Hello and welcome to another edition of Noisemaker, where we cut through the market noise to bring you some of the most exciting opportunities in the stock market. I'm Sejal Agrawal, Equity Research Analyst at Desvelado Advisory, and today we are diving into three companies that are making impressive strides in their industries. So without further delay, let's jump right in. And please remember that this is not a buy or sell recommendation of any kind. And today we'll be discussing three stocks: Route Mobile Ltd, Mahindra Lifespace Developers Ltd and Dhanuka Agritech Ltd. First up, we have Route Mobile Ltd, a leading cloud communication platform provider offering services to enterprises and mobile network operators. Recently, their wholly owned subsidiary, Route Mobile UK Ltd, made a strategic move by acquiring 75 lakh shares in PT Route Mobile Indonesia for IDR 7.5 billion, increasing their stake to 99.9%. This acquisition strengthens their foothold in the Indonesian market and supports their expansion strategy in Southeast Asia. Their financial performance shows a steady growth, while revenues increasing from 3,569 crore in 2023 to 4,023 crores in 2024, representing a 13% growth. The company maintains healthy EBITDA margin of 14% and is seeing strong traction in new products like RCS, WhatsApp Business, and AI-enabled customer solutions. Now let's explore Mahindra Lifespace Developers Ltd, which is a prominent real estate developer engaged in residential, commercial, and industrial projects. The company recently announced a significant joint development with GKW Ltd for a 37-acre land parcel in Bhandup, Mumbai, with a development potential of around 3.6 million square feet. They have also expanded their industrial presence through a 225 crore investment in Sumitomo Corporation for Origins of Mahindra Phase 2 in Tamil Nadu. Also, the company has achieved 67% gross margin in Q2 FY25 with a revenue of 8 crores. Lastly, we have Dhanuka Agritech Ltd, which is a leading agrochemical manufacturer, recently made headlines by signing an agreement with Bayer AG Germany to acquire the crop protection active ingredients Iprovalicarb and Tridenamol, along with the Melody trademark. This strategic acquisition enhances their specialty portfolio and supports Rabi average growth. Their financial performance has been impressive, with the management expecting gross margin improvement of at least 100 basis points for the full year, with the potential for 200 basis points improvement. Their financial performance shows a steady growth, with revenues increasing from 494 crores in Q1 FY25 to 654 crores in Q2 FY25, representing 32% growth. Looking at the previous picks, Elpro International Limited, covered at Rs 108.5 on 22nd November, is now trading at Rs 112, which is an increase of upside of 3.22%. Moship Technologies Limited, covered at Rs 218.5 on 22nd November, is now trading at Rs 231.6, which is an upside of 5.9%. Mathan Alloys Limited, covered at Rs 1073 on 22nd November, is now trading at Rs 1067.95, which is a downside of 0.47%. International Conveyors Limited, covered at Rs 81.8 on 19 November, is now trading at Rs 81.5, which is a downside of 0.36%. Kilburn Engineering Limited, covered at Rs 477.75 on 18 November, is now trading at Rs 489, which is an upside of 2.3%. Now, to summarize our today's market analysis, we have spotlighted three companies with compelling growth trajectories. Route Mobile, currently trading at Rs 1,432 with a market cap of Rs 9,076 crores, has recently increased its foothold in the Indonesian market by acquiring 75 lakh shares of their subsidiary, This move further strengthens the management's anticipation of a revenue growth of 18 to 22% in FY25 as compared to approx 13% growth in FY24. Mahindra Lifespace Ltd, currently trading at Rs 473.8 with a market cap of 7,452.5 crores, shows promise in industrial real estate with a strong launch pipeline of 2,300 crores in H2 FY25 and is planning to achieve a projected revenue growth of 15 to 20% in FY25. Our next pick is Dhanuka Agritech Ltd, currently trading at Rs 1,491.4 with a market cap of 6,757 crores. The company has recently signed an agreement to acquire crop protection active ingredients along with a trademark of one of its ingredients. This move is expected to help in improvement of gross margin by at least 100 basis points for the full year with a potential 200 basis points improvement compared to the previous guidance. So that's it for today. If you missed any of the details, don't worry, you can always refer to the Noisemaker PDF in description. Thank you for tuning in and stay ahead of the market with Desvelado Advisory.